It's a big morning for the market. NFP and unemployment rate data are both likely to impact the whole thing, right? All this economic data we have coming out today, especially the NFP and unemployment rate data, are likely to be catalyst for Bitcoin price action. Yep. Hey guys, long-awaited day here for sure, and glad to finally be here. Like, we've been anticipating this for a while, right? Like since maybe even before the monthly close for Bitcoin. Whatever the case, the day is here. And so let's climb in. Before we do that, of course, if you like the analysis that I crank out here on the regular, please do me a favor and smash all the buttons. Hit that like button, hit that share button especially, and help me grow the channel. And for sure, hit that subscribe button up above, this one over here, so that you don't miss any of the lives as I crank them out pretty much daily during the week, but times kind of vary based on what I got going on in the morning. In any case, happy to be here with you again today. We've been talking about this data for a long time, and the day is here, right? And so my analysis from yesterday, really my analysis from the past week or so, as it relates to this, has not changed. So today I'm going to focus mostly on the order book. I would say this, kind of preface this by saying, as I do regularly, but we have new people following us all the time. So I'm going to say I'm not an economist. So keep that in mind, and we will move into this analysis. I will just say this in relationship to the numbers, which are coming out here in now 30 minutes or so. So we're going to keep this brief, but I would say that I do believe that we are in a good news equals good news phase of the market. And so that's kind of the approach that I'm taking as we head into this. The rate cuts are baked in, no question about it. I think the market is 100% confident that we're going to see a rate cut here in September. The question is whether it's going to be a 25 basis point cut or a 50 basis point cut. And today's numbers could really impact that, right? High unemployment is going to potentially influence the Fed to make a higher rate cut. Does that potentially point to more concern over a hard landing and a deep recession versus maybe a flat unemployment number or even a slightly lower unemployment number that might indicate that things are not as bad as a lot of people may think? Yesterday's data kind of pointed to that, and today, of course, we're looking at all of these numbers, but especially non-farm payrolls and unemployment rate. Last month, we ticked up 0.2% to 4.3%, and today, we really don't want to see things go higher than that. In terms of what's happening in the charts, this is really where I'm watching closely. Yesterday, we had a block of bid liquidity. Bitcoin bid liquidity moved up from the 50K range up to the 55K range. And as we can see today, well, it got rugged. I was thinking that maybe it got hit, but it really did not get hit. It came within a couple $100, but it did not get hit. It got pulled. And now we're seeing a little bit of softness below 55K, where we have bids moving lower and potentially, another rug pull here at the 52K level. This was kind of like, fortifying the support level here. And that's thinning out a little bit. Now, is that thinning out because they think that they want to open the door to go down, or is it thinning out because they don't have sentiment to go up? We're about to find out here in the next 25 minutes or so. So this is really what we're watching closely. You can see some of these bids are indeed moving back down. Here's that 45K, 46K range. So in terms of what we see on the candle chart, obviously, this does not look good. We've had a continuing downtrend here since that rejection on August 25th. And Bitcoin has just had a hard time finding any strength, right? After, I was encouraged when we reclaimed this 50-day moving average, but we lost it pretty quickly. So if you recall, I think this was actually the day that Fed Chair Powell had announced from Jackson Hole that, they felt like it was time to start changing policy and move towards cuts. We got a 6% candle that day. We pumped another couple of points up to, I think it was a net of about 8%, up above that 65K level, but we've not been able to reclaim it. That 65K level, the mid-cycle top from 2021, and that is an important one to reclaim so that we can start chipping away back at these other levels. But we have to do this one level at a time. So right now, the 21-day moving average is in my focus. And if we can reclaim that, then we can start talking about these here. In terms of downside potential, we have this lower low here. And I want to look at the weekly here real quick and see where our moving averages are coming into play. Our 50-week moving average also coming into play here around 53.5K-ish in that range. All of these moving averages to me are potential resistance and support levels, as you can see it, to the upside and the downside, right? So if this doesn't hold, then obviously we're heading down to prior levels. There is a little bit of technical support at 50. Obviously we have 50K, and we have this lower low here, just about 49.5, at least on Bitstamp. It might be different on whatever exchange you're trading on, and then the trend line. So the trend line has some correlation, some confluence with this 45K range. This would be, in my opinion, kind of the threshold here. So watching this for support, it would obviously be a fantastic place to launch from, as you can see. And I will clear out the trend precognition signals so that we can have a cleaner look at my noisy chart. And let's just focus on that for a second, right? We have this trend line dating all the way back to the FTX crash back in November of 2022. We've had a nice run up here. And because we are in the post-halving era, many people don't believe that this is the top. Many people don't believe that this is the top. It actually happened just before the halving, like a few weeks before the halving. So sure, this time might be different. What I'm looking for at this point, obviously these numbers are going to have something to do with how things play out, but I do think that we are deserving a retest of support here at this 49.5K level, and this could be a nice double bottom here to kick things off. If that doesn't hold, then we've got a little bit of a historical RS here at 48 and change, and then obviously we get down into that trend line, which is now at this point creeping up to about 45, just above 45K. So all of this is in play here. I think if we lose this, yes, this is the last line of defense here. This golden cross, by the way, between the 100-week and 200-week moving average, but down at 38K. And gosh, this really, in my opinion, if we lose the trend line, the door is really open to head down to this 25 to 30K range, which brings us back to generational buying opportunities that many of us believe may have come and gone. So we may get that opportunity depending on how these numbers are. I think a hot number in the unemployment rate. After all, those numbers do tend to spike. Do I have that chart open? Actually, let's see. I do. Here's a look at unemployment versus the Fed funds rate and the S&P 500. Bitcoin has a little bit of history here in purple, not enough history of these types of events to really go on, but the S&P certainly does. And as we can see, if we look at the unemployment rate, when the unemployment rate starts to tick up, it tends to trend up. Now, this was this spike was from the COVID crash, so that's a bit of an anomaly. But if you look at these other occasions where unemployment started to tick up, it did spike, and we see how cuts worked relative to that. And sometimes the market responds well to those cuts, and sometimes the market does not respond well to those cuts. And the reason is really based on what the outlook is after the cuts. So we'll do an analysis on that as we get closer to the September 18th FOMC meeting, where Fed Chair Powell will announce whether they're going to do a quarter point or a 50 basis point cut. That remains to be seen. So meanwhile, eyes again on the order book of what's happening here, and let's see if we can gain some perspective, zooming out a bit. Let's go to the month. You know what? Let's go to the year and see if things are changing down low first, right? Are we getting any more sentiment down here in these in the sub 40K range? And there is a little bit down here, as you can see. And if I boost the contrast here a little bit, very little below this 38K. We have really a ladder going from 38 up to where our current support is at 55K right now. So we've got about 44 million at the 55K range. We have another 48 million at the 50K range. So there's good depth here, but we want to see these concentrations. We want to see more of this, and we want to see it more like it is up here, right? 62 million up here in resistance, and we just gotta we have to keep pushing it up. We've got to get more concentrated bid liquidity close to price to have a chance to push past all of this. Now, if we filter out some of the lower volume on fire charts, we can focus on what really the most important areas are. And you can see, again, it's illustrated very well here that the 50K range and the 55K range are the strongest support. A bit of a move up here from 45, inching up perhaps maybe along that trend line to bring that bid support, that really third level of bid support up to that 46K range. In terms of volatility leading into this this rate cut, this data drop coming here in now about 15 minutes, you can see that I often say that liquidity dampens volatility, and we have some thin pockets here, right? The darker zones in the chart, and again, I'm going to boost the contrast. I'm going to filter out the lows to make it easy to see where liquidity is and where liquidity isn't. And we do have some support here, obviously, but we also have some dark areas of very thin liquidity where price can move very, very easily, and that happens in both directions. So depending on this news, if we have good news, we could see things move up. We could also see a fake out, which is pretty common in these events, but we can also see a rug pull, especially if we have bad news here, right? We could see a rug pull here at 55, and that's going to open the door to a deeper correction for sure. Again, I'm interested in seeing 50K get tested. So as we look at the chart here, that's a ripe target for me. And I think it's possible, even if we have good news today, I think that it's possible that leading into the FOMC meeting on the 18th, we could still round trip this range multiple times. So let's see real quick. I think I saw some comments. Oh, here we go. Let's see. AR, nice to have you with me, man. AR says, I was looking at some charts last night. Did you know the only time ever post halving Bitcoin put in 3 consecutive lower lows on the monthly was 2012, plus RSI looks like crap? Yeah, the RSI does look like crap. Let's look at that. Let's look at that monthly that he was referring to. And I can put in our little halving lines here to help illustrate this. And back in 2012, yeah, there was a dip, but this was, this, in my opinion, this looked pretty healthy, right? This was a correction. There was a consolidation and a move up. So that doesn't concern me so much. Same situation, you see these consolidations, and here's a dip, a consolidation, and price did eventually recover. Now, what we don't want to, and again here, the mid-cycle top we had in 2021. This isn't technically a mid-cycle top because this didn't happen before the beginning of the cycle. However, at least before the halving cycle. However, it could play out similarly to this, to where we have an extended, we have this dip, we have an extended consolidation down here, and then pump back up. Not saying that we're going back to that same level. Honestly, if we lose this 40 to 45K range, we lose these trends, then this range comes into play for me. So that's an interesting note, AR, but not one that personally concerns me so much because of what the outlook is. In terms of the RSI, Yeah, also not looking great. I do have a level on my RSI that I watch very, very closely, and you can see it being approached here on the weekly. Um, and that is this 42 line, which historically has been a good marker for uptrends and downtrends. And as long as we're above that line, this trend remains intact. Obviously, the trend remains intact at this point. And so until that gets broken and invalidated, I'm still holding on to my bias that in the end, my macro bias that price will eventually recover here and continue up. It may not be until 2025 until we see that. That remains to be seen. Economic data coming down the pipe here. We're going to get that drop in less than 15 minutes. So I am going to wrap this thing here and make way, actually prepare myself for what is going to happen. We're all going to be watching those numbers very, very closely. So all I can say for you is I hope that this insight helps you out a little bit. I hope that you are mitigating your risk and you're prepared for whatever can happen in either direction. Just know your invalidations. That's the most important thing. And to make those decisions before it happens so that you're not stuck trying to make an emotional decision on the fly, which for me, basically, or for me, I can say doesn't usually go well. So I try and make those decisions ahead of time. And so whatever happens, I know what my trade is. I know what my move is going to be. With that, I'm going to wrap it here. As you can see, we have room for volatility. Well, not a lot of downside volatility if this holds. Of course, if it gets rugged, that's a different story. And to the upside, it's an easy move to at least 58.5 at this stage. And if we have good news, we could see a roof pull here and potentially get back up into the 60K range and work our way up to that as well. Again, if you like the streams, do me a favor, leave a comment, hit the like button and share button, and for sure, make sure that you are hitting that subscribe button up in the corner so that you never miss a live stream. Thanks, guys. Have a fantastic day, and as always, trade safe, my friends.